Hi, welcome to Christensen Wealth Management. I'm Michael Christensen, and thank you for taking time out of your day to watch this weekly stock market update for the week ending Friday, November 30th, 2018. I'd like to begin by saying by the time you get this, it'll be December. So welcome to December. I wish you a very happy holiday season. Enjoy the next few weeks and what they mean to you and your family, and just try to enjoy it before it flies by, because it always does. Before I get started, I'd like to begin with the quote of the week. This week's quote is from Theodore Roosevelt. He once said, "Believe you can, and you'll be halfway there." It's a short quote, but those are some wise words from Theodore Roosevelt. Well, before we get into the charts and commentary, I'd like to say that it's been a very volatile week. We had the Federal Reserve come out with an announcement. Jerome Powell, the Fed chairman, came out on Wednesday, I think it was, or Tuesday. This week's gone very fast, but he basically said that the Federal Reserve is walking back or lowering their aggressiveness for interest rate increases in 2019. For the last 6 months or so, they've been saying three interest rate increases for 2019, and he said this week that they are almost done. And that caused the Dow Jones Industrial Average to shoot up on 600 points this week, and we have a slightly bullish bias in the stock market for the moment, and we're coming into what is traditionally a very bullish or upward trending time of year, which is December and the holiday season. So we'll see if we get some bullish follow through, but we're not out of the woods quite yet. We can have a little bit of bullishness in our attitudes because some of the indicators are turning that direction, but the intermediate and long-term indicators are still bearish or trending lower. So we'll see where we go over the next month and into 2019. I'm going to go ahead and just have a short video this week with just the Dow, S&P, and Nasdaq, and then I'll wrap it up. So let's go ahead and take a look at that chart, beginning with the Dow Jones Industrial Average. In this chart of the Dow Jones Industrial Average from November 30th, 2017 until November 30th, 2018, you can see that the Dow Jones has been extremely volatile throughout the calendar year of 2018, and as of the recording, it's up about 3% year to date since the start of 2018. Let's take a look at some of the details here. One of them is the fact that the Dow Jones is currently in a downtrend since it made its all-time high on October 3rd. If we take a look at the current trend, you can see that we have a first downtrend there from October 3rd until November 6th or 8th, it looks like. And then we have an acceleration of that downtrend from that same day, it is November 8th, down to where we are now on November 30th. So next week is going to be very important for the Dow Jones Industrial Average, and see if we can get it higher, get it all the way back up to this red line right there from October 3rd down to November 8th, and maybe we can make one more leg up and touch that. So like I said, December will be interesting. Let's look at the indicators here. The 5-day moving average in red is still below the 20-day moving average in blue, which does mean that the Dow Jones is still showing short-term weakness. And if we look at the more intermediate term, which is a time frame measured in weeks, not days, well, let's take a look. The 20-day moving average in blue is still below the 50-day moving average in purple, and the 50-day moving average is trending down. So on the intermediate term time scale, weeks to months, the Dow Jones is in a weakness confirmation as well. So the Dow Jones is looking pretty weak. However, it is the one index that has not broken its 2.5-year trend. And I'll show that to you real quick. From February of 2016, right there, if we draw the line up like that, you can see that the bottom made on February 10th was confirmed with another bottom here, another low point on November 4th, 2016. And if you connect those two lines and 2 points and you draw that line all the way up, you can see that we came down on November 23rd and tagged that line perfectly and bounced off it. So the Dow Jones Industrial Average is still holding its 2.5-year trend line, which is bullish for the moment, even though our short-term and intermediate-term indicators are showing weakness. Like I said, December will be a make or break month for the Dow Jones Industrial Average, and we'll see how it handles it. The S&P 500 and the Nasdaq, however, are not as lucky. They have both broken this trend line, and I'll show that to you right now, beginning with the S&P 500. In this chart of the S&P 500, you can see that 2018 was also a very volatile year for the S&P 500. Let's take a look at our indicators. The short-term indicators, the 5-day moving average in red, is still below the 20-day moving average in blue, but it is coming close to crossing. But as of right now, short-term indicators confirm that we are in a weakness position for the last many days in November. Now let's look at the intermediate term time frame over the past few weeks. The 20-day moving average in blue and the 50-day moving average in purple. The 20-day moving average is still well below the 50-day moving average, and the 50-day moving average is declining. So we have weakness on the intermediate term time frame as well, which is not a good sign for the S&P 500. Like I just said, the S&P is not as fortunate as the Dow to have held on to its trend line. I'll show you that right now. Let's zoom out to 2016. And I will draw the same line that I just showed you on the Dow and show you that the S&P 500 has broken its trend. Draw the line beginning with the low of February 10th, 2016. Draw that thing up, and you can see that we have broken the trend with connecting the low of February 10th, 2016, made the second point here on November 4th, 2016, made the third point here on April 2nd, 2018, tagged it another few times in there, and then broke it on October 10th, 2018, rallied up and failed, rallied up again and failed again, making a lower low, and now we're sitting down here. So the S&P 500 has broken its 2.5-year trend line, and I am keeping a close eye on this because it looks to me like the S&P 500 may drop about another 14% when you take the low of 2009 right there, March 10th, 2009. You draw that trend line up there. That could be, like I said, we'll just have to wait and see. That could be the next place that the S&P goes. So we've got the 2009 low, followed by a second point in September of 2011, followed by that third point on February 12th or February 10th, 2016, and you extend that line straight up, and there is the possibility, we'll see if it comes true, that the S&P may go down and touch that bottom line down there. So we'll see, but I would be extremely cautious regarding the S&P 500 until we get some further clarification and more bullishness, more positive chart readings, I guess you could say, than we currently have, which are all pointing to weakness and not strength at all. Here's the chart of the Nasdaq Composite Stock Index, a much more aggressive index risk-wise and volatility-wise than the Dow and the S&P. But you can see that it has had a choppy year. It had a much more bullish advance from the spring of this year up until about August, but it has also had a much more steep decline than the Dow and the S&P 500. Right now, as of November 30th, you can see that the Nasdaq is still in a downtrend. We take this high right here on October 3rd, connect it to the high of November 7th, and you can see that as of the recording of this video, we are sitting right on that downtrend line. So the first week of December, this thing is either going to break up or turn down. And we'll just have to wait and see how that plays out. But right now, we are on the edge of some move one way or the other. And if we take a look at the indicators, you can see that the 5-day moving average in red is still below the 20-day moving average in blue, which means that over the past many days, the Nasdaq has been showing weakness. And if we look at the intermediate term indicators, the 20-day moving average in blue is still below the purple 50-day moving average, which indicates we've had significant weakness and confirmed weakness over the last several weeks to a couple months here. So the Nasdaq and this 50-day moving average, as well as that 20-day moving average, are in a pretty steep decline. That is not a good sign whatsoever for this particular index, and significant caution should be used when considering this index. Now I'm going to zoom out to 2016 like I did on the other charts and show you the 2.5-year trend line for this one. This one began on June 27th of 2016, and if you draw that line up, you can see that we had point 1 June 2016, point 2 was made November 2016. You connect those points and draw it up. You can see that we tagged that line April 2018, and we broke it in October, starting with about October 9th of 2018. Bounced up, failed, bounced up, just kissed it. You can see that the point of that line just kisses that red trend line almost to the penny, and then that was November 7th, and then we failed and made a lower low on November 19th before bouncing back up to that declining trend line I just showed you in the beginning of this chart. So the Nasdaq has failed, the S&P 500 has failed, the Dow is still hanging on to that 2.5-year trend line, but there is some storm clouds still rumbling and overhead for the Nasdaq and S&P, and you should use a lot of caution still, even though we've had a little bit of a bullish rally here in the market. We're not quite out of the woods yet, so any reallocation to stocks of any kind should be done slowly. Thank you again for watching this market update. Before you go, please do me a favor and click the subscribe button on this YouTube channel, and then click the little bell next to it if you haven't done so already. That will allow you to receive all additional videos as I post them. And then in the top right-hand corner of christensenwealth.com's homepage, and in the summary description of this video, you will find links to the Facebook, LinkedIn, Twitter, and website for Christensen Wealth Management. Please visit those pages when you have some time and like or follow them while you are there. Well, as I said, enjoy your holiday season. I'll be back in a week with another video. Until then, be careful with your money, watch this market, and as I like to say, getting back to even is not an investment strategy. The stock market is very volatile right now, and we just need to be a little more cautious than normal. Well, have a great day. See you in 7 days. Bye-bye.